Good evening. This is going to be an educational one. So I'll be speaking a little about how do you test yourself within a proper price action methods. Now, many people ask whether it is possible to apply the price action on the lower time frame, and the answer is yes, it is possible to apply on the lower time frame. But how low you can go? Because ultimately at one point you need to accept. 1 second please. Okay, sorry, I just paused it for a second. Now how low you can go? You can go to 15 minutes, you can go to 1 minute, but above 1 minute, below 1 minute there is nothing. So ideally what we say is that we follow a simple method, that if you want to become an intraday trader, you have to follow the simplest method, that is higher high and higher low. That's simple. It has made a higher high, it has made a higher low, and from here it went to this low. So what we are seeing right now in the 75 minutes, we are trying to understand that the market is trying to go upside. Okay, so we are trying to understand market is trying to go upside. Will it go? I have no idea. But what the pattern says, basically, see, when these people say supply and demand, when the supply was here, it came and retested and it came below, they say. Yes, there is a supply, there is a demand, and there is a basically. But when what happened when supply when this was closed above? So there should not be any supply left, right? So they have no answers. Then again it made a new high. Again it came below this previous pivotal line. Below this, and again it went up, it made an equal high or slightly more than this high. Again it came, it broke the pivotal line, it broke its median line. Now in this condition, how will you trade? Tell me. So the answer might be that you don't know. I'm sure many of traders say that okay, we follow support and resistance. No, that is not the right answer. That is not definitely a right answer. You check the RSI, that is also not right answer. That is also not right answer. You check MACD or anything, they say no, that is also not right answer. When you are trading price action, you should purely trade price action only. And one of the advantage of price action is that you will go with the daily, and from the daily perspective of the daily, you will understand what is happening, which is the recent high in the all-time high is this, and it has poked 2 times, it has come back. Will it come back on this? No. So this becomes a very particularly a biggest sideways move of nearly 5,000 points. Okay, when we consider a structure, so is this a supply that is going to bring this down? The question they ask is this a supply that is going to bring this down? And to know the answer, you must use the another tool, that is volume. Now in order to use the volume, I usually say that use the volume profile basically. Okay, fine, and I go this and I remove that developing PLC. Okay, and I change this into number of ticks per row, and I'll go with 20, sorry, I'll go with 20. Okay, 20 ticks. So when it becomes 20 ticks, tick in the sense that it's based on the tick value. Okay, and from here again this volume becomes, from this lower, this is the lowest low volume, right? This volume becomes Hinka B. In the sense, in a Japanese they call it as a reversal bar, hinkabi, and we take this and we hit to the first this thing. Now tell me, do you have a point of control above the previous point of control? If the answer is yes, you have a point of control above the previous point of control. This is the point of control. If the price is above the point of control, you must expect some changes. You must expect some continuation. Okay? Now, to the fact, we want to see the last POC. The last POC, the point of control is this. When we say last POC in the sense, this becomes the last POC. Okay? Until this high. This becomes the last POC and the price is below the last POC. I'm sorry, I don't know, I didn't understand. Price is below the POC. Price has closed below the POC. Yes, price has closed below the POC. So where is the next point of control? The next point of control is here, 24,800. Basically, what it will help you is that it will help you whether you want to trade options that are for determining whether you want to sell the option. Now what happens from this POC is made when price closed above this POC point of control, people started selling 23,200 puts. They also sold some iron condors and they also sold many things. So when you check the futures and options, you will come to know that they have been selling it. Now the second part is, here is a low volume area. Whenever there is a low volume area, the volume try to fill over there. Okay, here is a low volume node and exactly at the 1 second, let me use this tool. This is a low volume node. Exactly on the low volume node, this is the previous low volume node, and here where the previous now the next POC has formed. So POC always forms at the low volume. So this is the next POC. Okay. So what I will do is I will just change this color to blue so that you understand that is here is the next POC. It is forming here, and if you see there is also a POC over there. So this is the next POC. So what basically you are understanding is that point of control. You are understanding the point of control, and you can use this tool, small tool. 1 minute. Price label. You can use these price labels. Just to put in the. This is the price label. 25,918 is one of the price label. 930. You can just change it to coordinates. Go to coordinates. Go out 25,930. 1 second. 930. Oh, I'm very sorry. Is one of the coordinates. So this coordinate 25,980. I have paused it, and the next coordinate is this one, 24,840. So what I will do is I will bring that here only 24,840, and I'll go to 24,840. Okay, so that is the next coordinate. I'll lock it. Now I have two coordinates here. One is 25,000, which is in the future, which is marked in the future. Now what I will do is I will remove the POC. I will remove this POC. I will remove this. No. I will remove this POC. And I come back to the 75 minutes. And at the place of 75 minutes, I know the price have made. This is an inclined line. Agree? Okay, fine. And when we see this is the inclined line, basically it broke the inclined line. Okay, inclined line is nothing but it's bouncing of the ball, like price bounces to a certain degree, and that certain degree is understood as an inclined line. Okay, there is nothing much in it. Okay, usually if you want to see the angle of the line, I think last time I explained it. If you see the angle, just a minute, if you see the angle, it is around about 10 degree. It is very weak. So upside it is moving in the 10 degree, it is not moving in the 20 degree also. Okay, so it is very low probable move up. The second thing what we do is that we put this on the upside also, whether it makes any sense. Previous to, whether it makes any sense of declaration of ending of the trend, whether this trend is ending. So ideally the trend ends in this way: large stroke, small stroke, large stroke, small stroke, large stroke, small stroke, and then one large stroke and small stroke, and then one large stroke, and then it breaks. So this we call it as a diagonal shape. Okay, you do not need a textile diagonal shape, but what happens is, this is a one stroke, this is the second stroke. So this is, are we confirming it as a diagonal? The answer becomes no. The answer becomes no, because we don't have a three distinctive strokes in it. So if there is no diagonal, then the answer has to be, it is in a horizontal price axis. What is horizontal price axis? The price axis that is moving on the horizontal side. So you can only understand horizontal price axis when you understand whether the current price action is in the diagonal system. Now remember this very simply, very easy it is. If the price is in the form of contracting diagonal, okay, if it is in the form of contracting diagonal, the price exhibiting a nature that the moment when it makes a second high, the volume increases, third high, again the volume increases, fourth high, again the volume increases, and the last when it goes there, it gaps down. So there is no gap down here. Usually whenever I'll change the color now, whenever this kind of pattern makes, you will get a gap. It gaps down, but there is no gap down. So analysis, technical approach, I'm not telling about the fundamental approach, I'm telling about the technical approach. When you want to become a technical trader, you need to have all the tools, and you need to understand it when you are a FNO trader, futures and option trader. If you are a regular equity investor, if you are buyer and seller, okay, that is fine. You learn some technical, you follow RSI, MACD and other things. If we do not get a huge volume in this, so I will go to the volume now. Tell me, did you find a highest volume here? Yes, the answer is yes, but the previous volume is not there. 1 second. I will go to trading view. 1 second, please. Alright. So, whenever I'll say select this, whenever this do we have a high volume on this and high volume on this, and it should gap down very sharply, and it should not remain there. It should gap down and it should break immediately within 3 or 4 candles. Okay, so that is how basically things work. 1 second, please. That's how basically things work, but I didn't get it. Okay, but here when we see this one, when we see here, this is one top, the low volume, this is the second top, slightly higher than the previous one. Okay, and when you see this one, you don't find a very high value, so you find an average volume. I will show you both. This volume is 213.83 millions, and this volume is 338 Okay, 100 million is more, but when you see this one, it is 490 million. Okay, so let me put the volume on volume indicator. What is 10-day moving average? Volume moving average. So it is this one is above the 10-day moving average, and this one is below the 10-day moving average. It has increased because of the double top psychology. The psychology has to be understood and accepted. Okay, volumes, when you see this one, this is 750 million, and when you see that this kind of volume, and even it, one second, when you see this kind of volume on this and it doesn't break here and gives us a reversal, that is the only way you can enter. That is the only way you can enter. I say it's going to go up, and it is going to go up. Okay, and if you see the volume on this, just a minute please. If you see volume on this, and it did not break, it did not close below this, and it made a new high. Yes, you will get a volume indication. They cannot hide without making proper understanding. So when we go on 1 hour, what we see is that we see the huge volume on the upside move, and then it drops back. Then again volume comes back to 76 million, and when it is going up, it is going about 111 million. So there is a short recovery. Okay, I understand there is a short recovery, but I do not see any unusual volume on the Nifty. 141 million. When it is going up, if you see carefully, 141 million quantity on very small doji on 1 hour. This is the indication that institutions are playing here. Institution, whenever they buy, they sell. They make a doji. They don't make a big candles. Big candle comes only after the doji. Okay. So this is how basically you need to understand, and this is how you need to follow the system. Right, fine. Now you want to know how do you trade it. Okay. So usually this is how the our supply and demand people will trade. This is how they say, okay, now it has gone there, it has tagged there. Now it is, this supply has to be eliminated. There is a demand here. So these are all things they say. What we say is that it is going for 25,930. Why? Because we already know it is going for 25,930 due to pattern based system, that is impulse, correction and impulse. And in the impulse it is going to 25,930. One second, excuse me. Okay. It is going up to, it can gap up 25,930. Yes, it can gap up 25,930. Only after that, only after this move, we will come to know whether it is going to make a low here and then start moving up, or it will make a new low. Until that, we also don't know. So these are the facts you must understand as a pattern trader and an FNO trader. And when this is going up here, we basically sell at the money call here. We buy out of the money call. So we take up a basically spreads. 20th जनवरी का जो स्प्रेड है वो हम इसमें निकाल लेते हैं. ठीक है, we make that spread. So those spread earnings are nothing but, I will show you that how the spread works. One second, I will go to option trader and I'll try to bring okay. Now in the Nifty, I go to the builder. Okay, and in the Nifty, what I will do is I want to sell, say I want to sell 25,700 put, and I want to buy 25,400 put. So let's say, so here I will take this, and I want to buy put. Actually here I want to go put 25,400, okay, and I want to sell put 25,800. So I'll select this, okay. Now it gives me net premium 8,362. Overall margin is 1,96,000. That how much you need for a futures trading. Okay, how much you need for futures trading? It is giving you only that much. If you want, you can go for this way. You can go for one this thing. It will increase this. So maximum loss, yes, it is more than maximum. But here, if you see, probability of this thing, risk to reward is 1.77. And if you just reduce this to back to the this thing, now risk to reward is 2.11 and probability stands 57.43. Probability stands 57.43. So this is a money you can make, but by selling options. Okay, you can call it as an iron condor or whatever it is, I don't know. We do this, and if you check the geeks, one second, check the delta here and gamma value, and you see everything is in your favor. Not only payoff, adjustments, if you see the adjustment and yeah, IV set off, if you set it, and you will come to know. Okay, so this is how you can work, you can take benefit of the patterns. What are you doing? Even when it is going upside, we sell at the money call and we buy out of the money call. So by making that, we make a lot of money. 10,000 rupees, yes, 10,000 rupees, 100 points, we make money. 120, 130 points. So that is the reason you must have a proper, valid, proper pattern identification in order to make money, in order to sell options, in order to buy options. If you don't have that, and please remember, if you don't have that, it is very difficult for you to make money in the stock market as an FNO trader. It's very difficult. I think you have understood the importance of not only, see, you don't simply follow supply and demand. You also have to follow the open interest, you also have to follow the strategy to make money. Suppose, for example, you want to say you want to buy here 25,600 call, you must have a strategy. You must wait for this price to break on 27,100, then give a pullback 25,650 something, then buy 25,600 at the money call up to this only. By that time, 150 points in the Nifty, and you will have 60 to 70 points based on the IV. You will have 60 to 70 points in your pocket. So it is very difficult. Just I am posting you something. It doesn't give you complete picture. It gives us a picture only when you make it practice. I hope you have understood it, and if you have a question, please ask me, and please share my video so that other people can also understand it. Okay, thank you.